Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 3rd of November. So I've seen some really big moves in the markets over the last couple of days. The US dollar index is starting to feel a little bit of pain, and some of the indices are starting to certainly rocket up. So we'll jump straight into the charts, see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and yeah, really a continuation from what we saw last week. We saw the base form at around that support, at around that sort of 63-cent mark, and really it's done everything it's needed to do in terms of actually reflecting on that support and actually pushing up off it. You can see that well, obviously the MACD has played the game in that regard. We've got equal lows all the way through. That 63-cent mark certainly has held up, and you can see really it only breached once, and it was only very briefly because this is a daily chart, of course, and it was able to close well above the 63-cent mark on that particular day. Once it broke above the 20 moving average, it was off really. It really gave all the indications that we were trying to get in. Look, it's one of those ones where people say, I don't know how to get into that because, we can see that there's support there, but how do you actually enter? That's all about going to the time frames and making sure that you're trading in a time frame that actually works for you and in a time frame that you can see. So here on even on a 1 hour chart, you can see that we've got a series of higher highs and higher lows from the break of that 63-cent mark. And even when it did get up again, you can see that we've got reasonable moves out of every touch of the moving averages. It had a little bit of a mini pause here, but once it actually broke through here again, came back and touched a 20 moving average, you were off. So it really gave you plenty of signs. Even if you went down to a 15-minute chart, it really gives you another whole host of opportunities. You can see that you get in nice and early, and then once you've got the series of higher highs and higher lows that we talk about every single week, come back down to the 20 moving average, up, 20 moving average, up. Okay, 20 moving average up. So all of those are opportunities to actually join that, what you already really perceive to be happening on the daily chart. You know that we've already seen that strength to start to push through, and those smaller time frames gave the opportunity to get in, and how you actually get in and out of them using the moving averages. So pretty good trading on the Aussie actually. So look, more than likely, the 65-cent mark is going to be the next logical target. It's a pretty strong reversal zone. You can see it had good support there. It's had very strong resistance through here. You would think that any form of strength continuation in the dollar weakness, if you like, is going to push this up. So it's not a long way to go. We're only talking about, probably 60 or 70 pips, but it's not a bad aiming a spot, I suppose, because really that's where the resistance is. I'd be looking for a few more pullbacks on the smaller time frame to get it there. A little bit of momentum on the smaller time frame, and look towards that level. If it reverses for some reason around this point and starts to show weakness, and we start to see a series of lower highs and lower lows, the first place I'd be aiming for is that sort of 63.60 area, which is the 20 moving average. So look for maybe a potential pullback to the 20 moving average. And if it does that, then that's not a bad place to take profit on the short side. All right, US dollar CAD, and big fall. Look, we isolated the resistance last week, and like I said, I wouldn't be touching this unless it looks like it was actually going to break through and then come back and retest it from above. It certainly didn't do that. It hit the resistance, and as we probably expected, it did sell off. I wouldn't have expected a sell-off so brutal, because that is quite a big move in one candle. But that candle did give you the clue. Once we were up here, and you got the shooting star candle right there, big indecision candle, really closed quite ordinary. So it was always going to find weakness at that point, really. But the extent of that candle was quite big, because the 20 moving average is what you would have aimed for, really. Like if you were looking at shorting opportunities from this level, the 20 moving average would have been the first target, and it basically got there in one day. Like really, I mean, if you're into a 15-minute chart, you had opportunities again, and this is what I say, when you are trading that particular session, even though the candle on the daily looks like, well, how do you even get in on that unless you're at the very start? Here you can see very clearly that you've only got to go to the 15-minute chart to get your entries, okay? You've got that there is the perfect test, of course. As soon as it broke down through that level, came up and retested the 38.50, 138.50, bang, down she came. Retested the 20 moving average again, big drop down, retested the 20 moving average again, a big drop down. So 3 really solid opportunities to actually get into that trade, which what looks like a very big daily drop. It looks impossible to trade. So all you've got to do is go to the smaller time frames and isolate those levels, use the 20 moving average as your guide, and it's happy days. So yeah, good trading on the CAD. Really, if we rebound from this level, the 20 moving average might see a little bit of a rebound from here. It might retest it. If it does, I'd be looking for, yeah, probably that resistance as the first point of call. But that is, yeah, it's basically 100 pips away. So really what you'd be looking for is a couple of moves of higher high, higher low sequences on the smaller time frames, if that's what we get, and then look at that as being the target. But again, I wouldn't be looking longer than this area here until it well and truly breaks through and test it from above. All right, US dollar yen, and yeah, look, another similar move in the sense that it had a good breakthrough. Like, yeah, we were talking about this level being yeah, constricted and looking for a breakout, and breakout it did. Straight up, it went pretty high actually. It got to yeah, what, 151, sort of 70-ish. Pulled back to the 20 moving average and that support zone, what would be support zone now. It's a roll reversal zone, so support will be where the resistance was, we would expect. And that's probably the pullbacks that I'm always looking for. Like I said in the previous ones, when you do get a break of a very, very strong zone, you don't want to take the initial break. You want to let it come back and test it. What we're looking for now is any sign of a rounding bottom on the smaller time frames, a series of higher highs and higher lows on a 4-hour or a 1 hour. I wouldn't go too short because you want to keep it fairly real. So, you know, the short ones can give you a little bit of a fake signal sometimes, so I'd be careful with that. But if we get a series of high highs and high lows, say on a 1 hour chart, the first target would be the 150, 170, of course. And then once that gets broken through, we'll be starting to look at bigger targets. If it actually fails to hold here at this support and it breaks lower than the 20 moving average, then the next point of call would be around this level here, which is around that sort of 148.30 area. You can see the peaks and the levels through this area here. I'll pop a line there. So you can see that is the level that I'd be looking for as a support base if it does break through the 20 moving average. But again, you don't want to be looking at the long opportunity until it actually does reverse. You need to see that momentum shift on the 1 hour at least before you start looking at long opportunities to get back up there. Okay, dollar index. Look, the dollar has been very, very volatile over the last few days. As you can see, it's been a very volatile week actually, or you know, really, like when you look at the sort of 5 days trading, very, very big and ugly candles. It makes it very, very difficult to trade. Like, these are the sorts of candles that I see and I think, well, this is not a great place to be looking at opportunities because the candles are just not steady. The technical analysis is just not really good at this level. Yes, it's struggling to hold up at this level. That tells me, all that volatility tells me that we're having trouble at this level breaking through. So the imminent weakness could be there. But really, the euro is what we're looking at, of course. The dollar strength is all over the place. Euro is just as bad. Yeah, in terms of candle prettiness, it's not very pretty at all. But you can see though that it's a little bit more steady in the sense that it hit the support level at around that sort of 105.20 area, bounced straight up to the 106.80. Big swings, really. I mean, there have been fairly big swings over the last few days, but what this needs to do is one or two things. I mean, it's very volatile for the inside trading. If you want to trade inside that zone as a scalping opportunity, it's certainly opportunities there. But really, until it either breaks above all of this noise and we get a solid day close above the 107, if we get a daily close above the 107, then we can look at starting to look at bigger highs back up to that sort of 108.50 area, or a break lower than the 105, and then of course we're going to be looking at that 104.50 as the initial target. Anywhere in this zone though is trading, but remember, it is very volatile, so just keep an eye on that. I'd be keeping my trade short inside this zone until we get a break either above 107 or a break below 105. But really, yeah, from what we can see on the dollar index, probably the break above 107 is the more likely scenario here, but just remember to keep the trades pretty tight inside that zone. And the S&P 500 has seen a huge rise over the last week. You can see these last two candles have been very, very big. Earnings have been good. The interest rates are supposedly going to be on hold. That's what the market certainly thinks. So, that being the case, it's obviously good news for the market. It's approaching very, very quickly a very strong resistance zone at 43.50. That was very, very heavy support here at the head and shoulders neckline. So, if it does push on that extra 30 or 40 points to get there, that's probably where you will find a reasonable amount of resistance. It's hard to see it breaking through there and continuing on. And if it did, I wouldn't probably trust that move anyway. This move down here, once it broke up past this previous support and resistance zone, that was really the clue. The 20 moving average was something that you would have been aware of for sure. No question about that, because it's an important level, and it did hit it, and that was the potential reversal zone. But for me, this hasn't proven itself to be out of a trend yet. We're still in a downtrend. series of lower highs and lower lows on the daily. So even though this big push up looks very, very strong, I'm still wanting it to do a little bit more before it convinces me that we're going to be back at 4,500. So what it needs to do, ideally what it needs to do is actually pull back, take a breathing break, and come back and probably test the 20 moving average to give us a sequence of higher highs and higher lows. I don't like out of control markets that go up in one big straight line, because sometimes they come down just as fast and they're hard to get into. So really what we're looking for is hopefully a bit of a pullback to the 20 moving average, give us some technical sense back, and then we're looking at getting involved in the long. The first opportunities would be up to sort of 43.50, 43.80, and then once it breaks at 43.80, really the next zone is 4,500. If it starts to reverse from this point here and looks a bit weak in the US session, then we could look at trading it back to the 20 moving average at that 42.50 level, and at that point I'd be looking for any change in momentum. If we get a change in momentum for the long side, that would be a great opportunity to start looking at the 43.50 as a target. But of course, if it breaks the 20 moving average and starts to sell off, then the logical target's going to be that 4,200 again. So pretty big trading on the indices, and yeah, it's going to be a very interesting start to Monday. So where they land is going to give us a pretty good direction for the week either side. All right, I hope everyone's had a great week's trading. Some of the opportunities were really, really good in the currencies that we always look at. Have a fantastic weekend, and I look forward to seeing you all next week.